Traders work in front of the German share price index, DAX board, at the stock exchange in Frankfurt, Germany, August 14, 2017. Staff remote London. Reuters. European shares rose modestly on Tuesday, recovering further ground as geopolitical tensions eased in holiday-themed trading, though falls among commodity-related stocks capped gains. The Pan-European Stoxx 600 index was up 0.1%, weighed by a drop in the basic resources, SXPP and energy, SXEP sectors after oil prices gave up earlier gains. OR European blue chips, STOXX50 gained 0.3%, however, as did Britain's FTSE 100 FTSE, while Germany's DAX, GDAXI ticked 0.2% higher. Italian and Austrian markets were closed for a holiday. Health stocks and financials were the biggest contributors to gains, with banks, SX7P trading roughly flat. The sector was hit particularly hard in the latter part of last week as tensions rose between the United States and North Korea. Danone PA led the food and beverage index, SX3P higher, up 1.6% after a media report that the activist fund Corvex Management owned a stake in the French yogurt maker. Insurer and asset manager Standard Life Aberdeen SLA was among the biggest gainers, rising more than 2% following a supportive note from broker Barclays, which raised its rating on the firm to overweight, citing synergies from its acquisition of Aberdeen Asset Management. Deal synergies at £200 million appear attractive, and there is evidence to suggest that previous headwinds of outflows at GARS and global emerging markets GEM at Aberdeen are receding, analysts at Barclays said in a note, referring to Standard Life's flagship Global Absolute Return Strategies fund GARS. Elsewhere, Norwegian consumer publishing firm Schibsted SBSTA was the biggest faller, dropping 6.4% after Facebook FBO announced new marketplace services, while retailer NextNXT shares fell 3.7% after Berenberg cut its rating on the stock to sell from hold. Earnings also spurred some moves, with fund supermarket Hargreaves Lansdown HRGV falling 2.1% after reporting its full-year results. German potash miner K's SDFGN fell 5% after saying that it was unlikely to reach its 2020 earnings EBITDA target, blaming a slow recovery of potash prices. Analysts at UBS said that while K's second quarter results were broadly in line on depressed levels, the guidance was uninspiring. The European second quarter earnings season is rolling to her close, with 82% of MSCI Europe firms having already reported earnings, according to Thomson Reuters data. More than 60% have either met or beaten analysts' expectations. It's been a robust earnings season, however it hasn't been one that we feel justifies the high valuation of some of the European equity indices at this point in time, Jonathan Roy, advisory investment manager at Charles Hanover Investment, said, adding that for this reason trading is starting to be subdued in some of the indexes, such as Germany's DAX. Reporting by Kit Reese, editing by Richard Barmforth.